Hello everyone. Well, following Thursday's plunge in the dollar, Friday was a day of recovery after St. Louis Fed President Bullard revived hopes of tapering. Many people in the market had thought that the FOMC must have had strong reasons not to begin tapering off bond purchases this month, as the group usually prefers to meet market expectations. However, Bullard revealed that the decision was borderline, and that the FOMC meeting on October 29th and 30th was a live meeting that could decide on a small taper if the data justifies such a move. Thus, it's back to square one again, and we resume speculation over tapering. The Norwegian krone, the big winner on Thursday, was the biggest loser on Friday. And in the EM world, the South African rand even closed above its pre-FOMC levels, or dollar rand closed above its pre-FOMC levels. Volatility is likely to increase, and each U.S. economic indicator, particularly the weekly jobless claims and other labor market data, will be closely watched. A Bloomberg survey now indicates that a small majority of economists, 24 out of 41, expect tapering to begin at the December 17th and 18th meeting. Note, there isn't any meeting in November. In Germany, Chancellor Merkel has won a dramatic support from the voters, yet with her coalition party, the FDP, likely to drop out of parliament, her personal victory isn't a victory for the coalition as a whole. On the contrary, the result would be a big shift in Germany's political structure. The FDP usually stands for some pro-growth supply-side reforms, so the risk is that without it in the government, Germany's economic advantage may erode a little faster than it would have before. Nonetheless, a slowdown in structural reforms will only affect growth in the longer term, while in the short term, with Merkel and her strengthened party in charge, Germany has demonstrated its overwhelming support for pro-Europe policies. So, I expect the result to be slightly euro-positive, although the likely result, a coalition with the SPD, is pretty much what the market had expected, and thus is no surprise. The Social Democrats favor less austerity in the peripheral countries, which should be beneficial for Eurozone growth, and hence take some pressure off the ECB to ease, which also would be euro-positive. Today's indicators include the preliminary manufacturing and service sector PMIs for China, France, Germany, and the Eurozone as a whole for September. China got the ball rolling overnight with higher than expected figure of 51.2, up from 50.1 in August. The manufacturing PMIs for Europe are also all expected to improve and to be over 50, showing that the Eurozone economy continues to expand, which could be euro-positive. In the U.S., the market preliminary manufacturing PMI is coming out for September, but that isn't as closely watched as the ISM index, which is due out on the 1st of October. The market will be focusing today instead on speeches by several Fed officials, New York Fed President Dudley, Atlanta Fed President Lockhart, and Dallas Fed President Fisher. The dovish Mr. Dudley, who's a 1 on the 1 to 5 Reuters Dove-Hawk scale, will probably be the most closely watched of these speeches, especially as the other two aren't voters. Also, ECB President Draghi speaks at the European Parliament in Brussels. The main items on the agenda for the week are the possible announcement of the next Fed chairman and any news about a U.S. budget agreement or probably lack thereof, which could be seriously dollar negative. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.